Hello, everyone. Bob Burnett with me in the house today, talking about his company, Barefoot Mining, and we're going to discuss opportunities in Bitcoin. Bob, good to see you again. It's been about, maybe 9 months since we've last seen each other?
We saw each other in January, so 7 months.
Well, okay, it feels like 9. This
Yeah.
weekend aged me about a year.
Yeah. So good. Thank you for having me. Good to see you, Gary.
Yeah. Bob, love the audience to know, your background. I'm starting to see a lot of gray hair guys come into the Bitcoin industry, and I think it's scary. I've been called a suit a number of times, and I haven't actually worn a suit in a long time, but they keep calling me the suit. Why are so many gray hairs coming into this industry, man?
Yeah. Well, I think slowly there is an understanding that it's real. And I think our generation, I'm technically a boomer. I was born in 1964. So the end of that generation. And I think they've dealt with this with a lot of skepticism. I think our generation, like even for me, I came, I guess I'll talk about my background a little bit, but I came through the technology industry. And as I'm sure most people know, there were a lot of flameouts, right? I mean, our generation got burned in 98, got burned in 2001, 2002, got burned in 2008. A lot, especially the first couple, were technology bubbles that burst. And I think there's just a lot of skepticism, and they're more cautious, right? I mean, I am atypical. I have a feeling you are too. I have an insanely disproportionate amount of my wealth in Bitcoin and Bitcoin related interests. And if this doesn't work out, I got issues. But I believe in it that much. I do not lose sleep over it. But
yeah, so this is really fascinating for me. So give us your background before you got into Bitcoin.
All right. So I going back, to my early days, I've always been very technology focused. I started programming in the late 70s, in high school, doing work for a law firm, an accounting firm, which had even pre-IBM PC stuff. But I ended up getting a degree in computer engineering. Also have a minor degree in economics, interestingly. But my first job out of school was with a company called Zenith. You probably remember. It was a major TV brand. But in the period of the mid 80s, they were one of the very first companies to start cloning the IBM PC. So you probably remember that term, the IBM PC clone. So for those in the audience, IBM created the first, I guess what you call, true personal computer, and then people started to copy it, and those were called clones. And it wasn't an open architecture. So by cloning it, you had to reverse engineer it to create it. So I went to work for Zenith, which had a division doing that. And fortunately, in a very junior way, was part of a team that designed what I believe to be the world's first laptop. There's a little bit of controversy, and it was very successful. In the late 80s, Zenith was the largest laptop supplier in the world. I left, did a technology startup funded by the Japanese. Mitsui was our main investor, big Japanese company. And we were trying to push the technology envelope there. So we designed the world's first computer that would run Windows that weighed less than 1 kilogram, 2.2 pounds. I'll shortcut the story. We were successful designing that product, but we didn't have the budget to market it, to sell it, to have a support team and all that. So essentially we sold it to Gateway. And as part of that, I joined Gateway. So basically they bought me in addition to the product. And this was before Gateway IPO'd. Again, for the younger members of the audience, in the 90s, Gateway became one of the top 5 personal computer companies in the world. And so I joined there. They had me run the mobile computing division at first. Then I became the chief technology officer there, and I led the product development there.
Wow.
And then at the tail end, I managed Gateway International, so I ran all the overseas markets and businesses there. So anyway, I'll probably stop there.
Yeah. So basically, if I hear you right, you grew up in this age where computing was becoming, uh, granted, the advancements seem slow today, but they were actually really making a lot of advancements, what I call compression, right? Where everything's getting smaller, faster, better. And we've
Correct.
seen that for a good 25 years, right? Um,
Yes.
it's interesting you bring up some of these players, Zenith, Gateway. Then Gateway did a deal with Dell, if my memory serves me correct, or Dell bought, which Dell bought Gateway.
Acer bought Gateway. The Taiwanese
Acer
company.
bought Gateway.
Mhm.
The reason I'm bringing all this up is Gateway even still around?
The brand
Zenith
still
is gone.
exists. So
Okay.
Acer bought the. I mean, I'm biased because I put a lot of my heart and soul into that company, and it was very
Yeah.
good to me. I did very well there, but I put a lot of my heart and soul in it, and I believe it was a phenomenal brand. And Acer bought it, but never. Instead, they continued to try to push their own brand.
Yeah.
And
Yeah. The point I'm trying to make, Zenith, Mitsubishi used to be a monster player here. You don't even see them in deals anymore. They were all over the energy complex in the late 90s and early 2000s. They're gone. Zenith is gone.
yeah,
I don't even know what Gateway is anymore. IBM is a company that you don't even refer to anymore. Like, I'm
yeah,
seeing massive multi-billion-dollar entities being left behind. And it's stunning to me that so many people still fight this trend. This trend has been going on for 40 or 50 years. This is not a Bitcoin trend. This is a technology trend that just keeps getting bigger, faster, smaller, cheaper, easier,
yeah,
denser.
right,
And that leads us to Bitcoin. See, I think we're
right.
digitizing planet Earth, and it's like we're literally moving. This is not really about Bitcoin. This is about technology and us moving to digitizing the entire planet,
I
and not
completely agree.
using an analog like
Oh,
Excel spreadsheets just won't be able to do it. They're not big enough,
yeah.
right? The pencil, I can only retain so much data now.
Mhm.
When it takes me about 12 transactions to buy one Bitcoin, imagine what it's going to be in the future. We're going to add, I think, 12 to 20 billion 1099 forms to the legacy marketplace that has to do reporting and audits.
Yeah.
12 billion on top of 4 billion. That is a 300% increase. It's going to labor the entire system.
Yeah.
The reason I'm bringing this up here, you've been around since 64. You've seen dozens of legacy players who had multi-billion-dollar positions that are no longer relevant.
Yeah.
And I find that to be really staggering, right? Like, wow, you
Yeah.
really, dozens of companies that are no longer
Yeah.
relevant. Where the Exxon Mobil's even have been pushed down into the top 20 or 30, they're no longer even the top 10 players, is something really significant going on here.
Yeah. Yeah, I think there's several things we can learn by looking back, and one you're pointing out is whoever you think the giants are today, they are very suspect to falling. Like, and it doesn't take much to topple a multi-billion-dollar company. Gateway, they could give you some stats. In Gateway in the year 2000, so I was CTO at that time, we had 25,000 employees. We were building 10 million PCs a year. We had 10 billion in revenue, and we were making $1 billion in profit. So that's how and the younger people maybe watching this show may not remember the brand. That was less than 25 years ago. And the field is littered with other gateways. You mentioned some of them, like IBM is the originator of the PC, by the way, was already dead by the year 2000. They didn't make it 20 years. They
Right.
created this thing that was the revolution and then blew it. And it happens all the time. It happens in other, like the story of Kodak, for instance, is well known. and high flying internet companies and all that. So you never know. Like if you look in the Bitcoin world, like a couple things, one is the giants of today, 10 years from now are, I don't wish ill on them, but they're unlikely to make it. It's really difficult to navigate. Number one. Number two, the likelihood that new people emerge very, very quickly also exists. I don't think that, like you talked about in this world, when people innovate, when companies innovate, things can just change so quickly, and we've seen it over and over and over again. And by the way, we are small. We'll probably talk more about mining, but to put in perspective how small the mining industry is, I gave you those stats about Gateway. Gateway in the year 2000, by the way, measured in $2,000, not present value dollars. Its revenue was as big as the entire Bitcoin mining industry last year. So add up all the revenue for all the companies in the world, public and private, Gateway was the same size. So that's how small we are.
Yeah. As an industry, you're saying we're early. See, I like to say that we're early. We're like I look at Bitcoin and I think it should be priced in market cap, not in coins, because you're really, Bitcoin really is an industry. It's actually the only industry, for the very reasons you just talked about, just the examples. I have never invested in the guy that discovered the idea. Like, I hate the first guy. I'm like, oh man, everybody wants to be first. I'm like, give me an example where first actually ended up first, because I think number 8 ends up first. They learn from the first 7 guys. Like I have Node 40, right? We learned from 12 companies that raised $500 million in cash on no revenue. And now they have a problem because they raised too much money, and they literally launched a project into a marketplace that, and I am talking about digital, where they overpromised, they grossly underdelivered, and they grossly understood the problem they're trying to solve, which is, how do you track all of these digital assets? And how do you do it in a really efficient manner?
Right.
Keeping in mind, no one's done this before, because no one's really paid any taxes or done any accounting on crypto, sadly. They've acted like this is going to be the Wild West forever. It's not. It's actually getting very professional now. I came in this space in 2016 and really started putting a bunch of energy into it in 2018, 19. I think actually my entry into this is really good timing, because I haven't spent 12 years. Now, there's a lot of things I don't know about the industry, but the first 12 or 14 years, a lot of discovery, a lot of mistakes are made. I just see us on the precipice of really now moving into a multi-trillion-dollar, from 1.2 to $3 trillion industry.
Right.
That's going to offer opportunities. And that's what I would have labeled this, Bob, is, a guy with your background, why Bitcoin? And you must see tremendous opportunities here. You own it. Now you're building a business around it. Let's talk a little bit about the opportunities you see here, both from a personal perspective of investing and also from a Bitcoin mining perspective, and how you would look at that investment.
Sure. All right. Well, my impetus largely comes around that I now look back at the world with a lot of clarity, and I can say that while I worked hard and I'm very proud of what I did, I was very fortunate and lucky in certain ways, and the truth of the matter is, I was in a system that did help me, that I'm not sure is a fair system, right? I was in a good position for it. We, like when I was at Gateway, we IPO'd in 1993. So I had joined about a year and a half before. got a bunch of stock options. Like I said, I'm proud of what I did.
Yeah.
And I did really well, right? I got a lot of pre-IPO shares. I continued to gain shares. I saw you do a little thing, Gary, one day. I was watching some of your stuff and you said, well, hey, you can get rich working for somebody else. You had made that phrase. And while I do work for myself and believe in entrepreneurship and all that, there are paths where you can do really well. And I think I was one of those people also that benefited from that. But I also, part of my story really begins, I would say my Bitcoin journey really begins in earnest in 2001, because what had happened was I had made a lot of money in the 90s. And I had cashed out and I had managed to a certain degree my money well. Well, I was still active in the company and I had a big pile of money. And I said, well, I'm not going to give all this money to like one financial advisor or wealth advisor. So I hired 3 of them and I gave them each a third of my money. And I said to each of them, hey, I'm working hard. I'm traveling all over the world. I work a gazillion hours a week. Please manage this money for me, but don't lose it. Like that was my direction to them. 2001, 2002 came. That was the Enron thing, all the basically a big crash. Come back a few years later, look at my portfolio, and sure enough, lost a whole bunch of money, right? And at the same time, I was a C-suite executive in what became a Fortune 200 company. So I also started to interact through the 90s. I had started to interact with Wall Street a lot personally. So I would go on the road shows. We would hold the investor calls. I was the technology guy. I was selling them on our future technology vision, that sort of thing. Well, I'll be blunt about it. When I first went into the whole thing, I thought, oh, I'm going to be meeting with the Smith Barney guy, the Morgan Stanley guy.
The 22-year-old.
Well,
you didn't know he was 22.
Yeah, well, what I expected to meet somebody who was brilliant and experienced, and what I found was, people that didn't know they knew jack shit, and all they cared about was creating volatility in our stock. That's what they didn't care if we were doing better or worse. I didn't even know. Even with insider information, I could have never traded our stock well because they were just manipulating it continually. They would take good news and turn it into bad news. They take bad news and turn it into good news because that's the direction they wanted our stock to go. I became just completely disillusioned by that whole system. And so I started looking elsewhere. I mentioned I have a background in economics too. And I also realized that it was complete bullshit what I had learned in my formal education. I found Austrian economics around 2001, 2002. So I started reading Hayek and von Mises and some of those sort of on the side. So I was kind of ready for Bitcoin to a certain degree. I'm not sure why it took me till 2017 to get there. But those
let's talk about that. So why did it? Well, because I have this thesis. I saw it in 16. No, I saw it in 14. 16 passed. Why did you initially push it off?
I think my first exposure was 2012. And at the time, I had left Gateway. I was running a technology incubator. One of those companies was a computer refurbishment company. And so what we would do is we would take computers that would come from school districts or the government or a big corporation. They were going out of commission. We would buy them for a few pennies on the dollar, bring them in, refurbish them, and then resell them, usually to poor school districts and things like that. But we would have in our warehouse, we'd have thousands of computers that were advanced. Well, one day there was a guy that worked for me, lovely man. His name is Scott, and Scott was the kind of a tin hat foil guy. He would come into my office. I love the guy. He'd come in like once a week and tell me about everything from the aliens to the, whatever. There was always something, So one day he walks into my office and he says, Bob, have you heard about Bitcoin? No. He said, well, what we should do, it was a brilliant idea, is we've got these thousands of computers here that we're sitting there waiting to sell them. Why don't we plug them in and we'll mine Bitcoin? And I ran the math. The engineer in me, well, okay, I don't know anything about Bitcoin, but let me see if I can make money at it. Very fiat mentality on the whole thing. And I looked at it and it didn't make money. And then Scott, I was really skeptical because Scott was the one telling me to. By the way, there's a lesson in life in that. Like
Totally. Totally.
And
share the lesson, because I know what you're getting ready to say, but share the lesson with the audience.
Yeah, the idea was prejudice from the beginning because it came from Scott, who's a guy I love, but but the truth of the matter is he was the guy more likely to see it first because he had the open mind. He was always open to these ideas, and turns out I was closed. Like and that was a lesson for me. So so we didn't do it. By the way, God bless Scott. He had taken some of his own money. He did it by himself, and even as a small miner with a couple of machines in those early days, was able to mine enough money. And he wasn't really a Bitcoiner at the core, but he held long enough that he cashed out and bought a house for his family, bought a house outright for his family, and it was a great story for him that he was able to change the life and the quality of life of his family as a result of it. But it took me 4 or 5 years post that to clear my prejudice and really start looking at it in the right way again.
And your prejudice was basically, hey, look, this isn't a real guy. He's not a Wall Street guy. He's not asking the right question. There's no earnings here. There's no enterprise value.
Yeah. And I shame on me, even as a technical guy, like I didn't even read the white paper. Like when this project came up, I didn't read the white paper. I ran the numbers. Now, had I read the white paper, maybe I would have done it, but that's where I put it in my priority queue. Like, well, all right, I'll run the numbers. Oh, the numbers don't look right on the surface.
So when did you get the religion?
So I entered the space in 2017. I entered what I say through the back door, and the way I entered was this. I got a phone call one evening that it was 9 o'clock at night one evening. Phone rang, Seattle phone number. I didn't recognize it. I didn't want to answer it. My wife, my wife is this very instinctual person, and in a happy marriage too, you listen to your wife, right? I said, I'm not going to answer this. And she said, answer it. I said, I don't want to. She said, no, I'm telling you, answer that phone. Wow. I answered the phone. It was a guy that had worked for me back at Gateway. Hadn't spoken to him for 10 years. I said, Bob, my name's Bill. By the way, Bill from Seattle was not Bill Gates, although I do know Bill Gates. But he said, hey, I'm with a group. We're trying to build an Ethereum mining farm. This is proof of work era Ethereum. He said, we need 800 Ethereum mining servers, and we need 6 NVIDIA GPUs in every one. And so, 1, I can't get anybody that can build these for me, and number 2, I can't get anybody that can get the NVIDIA chips. Well, so I just had my computer hat on, like, hey, somebody's asking me to design a computer. So I looked at what it would require. 1, I looked at the technological landscape, and at that time, people designing mining equipment, it was horrible. Like the quality of the designs was horrible. So I said, well, yeah, I can design stuff way better than this, number 1. And number 2, little piece of history was I think it was 95, NVIDIA was a startup company and trying to get somebody to believe in them.
30 cents a share.
Excuse me?
30 cents a share.
Oh, yeah. Well, they were trying to get a customer, and they knocked on Gateway's door. me and my kind of my right hand man, the president of Barefoot Mining. I'm the CEO and founder, but the right hand man is a guy named Keith Thomas, who was the head of desktop engineering at Gateway. So we were the first company in the world to become a customer of NVIDIA. We gave them their chance and designed their chip on a board. And the same team, by the way, still their executive core from Jensen on down is still, most of those guys are still there. And so we called them up and said, hey, do you remember us? Yeah, they remembered us and they were thankful. And we said, hey, we know that you don't have many of these chips around, but if we needed like 5,000 of them right away, could you get them for us? And they were very nice, said, yes, in essence, we owe you one. So here you go.
Nice.
So we got into that. And by the way, that was like a $6 million order. So that's how expensive those were at the time. So we started a new company that you now know as Barefoot Mining to fulfill that order. And then I went to other people and said, hey, I've designed this thing. Would you like some? And other people said yes. But almost all those people said yes, but only if you will host the machine for me. Because the first guy had a farm he was building, but the rest of the people were, I'm interested in this, but you have to run them for me. So we had to go lease a data center. We actually leased the old Gateway data center, which was defunct and not operational. So we leased that data center, which we still operate in one of our operations today, started hosting. And then we realized these are actually making a lot of money. So we started taking the profits and putting it into our own mining equipment to mine for ourselves. So at this point, though, I'm still thinking about it as a computer guy, just making money. But I then started to peel back the onion. I went and I said, okay, what is this thing I'm building? What is Ethereum? How is it really running? And I started to feel uncomfortable pretty quickly. The complexity of the project, the centralization forces, the announcement that had already been made that they eventually were going to move to proof of stake, like all these things I looked at and as a technical guy I didn't like. So then I said, well, what does Bitcoin look like? Then I read the white paper. Okay. And then I went, oh, I'm actually a Bitcoiner. So this would have been 2018. And so we pivoted the company. We shifted away from Ethereum, signed a deal with a company called Bitfury, which at the time was one of the bigger makers of mining equipment. We became the U.S. distributor and service center for their equipment. And then started this migration, to cleanse ourselves of the Ethereum and become a pure Bitcoin company.
Has that been an excellent move for you?
Oh, absolutely. Absolutely. Yeah. It's been a wonderful experience.
So when did you start holding Bitcoin? When did you get serious about Bitcoin as your own position? It sounds like you might have gone in on your own position, and then is that true that you really converted when you looked at your own wealth and the 3 investment advisors before that just smoked your earnings?
Well, yeah, I started converting a lot of my assets to Bitcoin in 2018, personally, and a lot of money. I mean, I have a lot of money in our mining company too. So I mean, I don't, I hold Bitcoin, but I also have this thing that generates Bitcoin.
Yeah,
Yeah,
I love owning Bitcoin. I also like owning investments in the infrastructure in the Bitcoin industry. Those businesses may not create the liquidity that I would like from time to time, but I think it's a really good position to have a business inside of this industry. If Bitcoin grows, the industry has to grow. Like Bitcoin's just not one thing. It needs all the things that we have ever become used to in legacy, including cups of coffee. Okay. Like this world is not going to change. It's still going to need secretaries and reporting and audits, risk management. And none of that's here. I mean, I don't know a miner that actually knows what his cost base is. I don't know an accounting firm that can handle all of the digital accounts that haven't been filed a tax form in 3 years. I mean, we're just so early
Yeah.
in this
Well,
industry.
you're right. We've had to create a lot of things. I remember having a conversation with Deloitte probably 4 years ago now. And because we were looking for some advice in this area. And I would say to the large part, I paid them several $100s per hour for me to explain things to them. So, because it turned out
They did that trade 20 times with other people like you. It's the same rate, man.
yeah, it's but yeah, and that's, I'm not being overly critical of them, and they've taken that very seriously, by the way. I know they do know their shit, and there are firms that do know it, but there's often a lot of gray area too, just like in the mechanics of the business. And how do you establish your cost basis, and how do you track your gains? And so us as a mining company, like, we have every day we're getting payouts in Bitcoin. You could think of it as kind of not really DCAing, but I mean, we have cash flow every single day in Bitcoin, multiple payments often that come in from different mining operations and different pools and different things. And so to establish where that came from, when it hit, what's the cost basis? Okay. And then 2 weeks later, we have to sell some off because we do have a payroll and we do have all that. And so which Bitcoin did we sell?
Yeah,
And
exactly.
was there a capital gain or loss? And all it takes a lot to track that. It'd be a lot easier if we were in a Bitcoin economy, but we're not. We're in one where our business is measured, at least by the tax authorities, on a dollar basis, and it makes our life difficult.
Well, on a different note, and I think I can probably help you guys with some of the back office stuff and make it really efficient. If you want to have that conversation through the Node 40 business, there's no reason for you to spend any money on this. We've already figured out how to do it. Like, when I saw this opportunity, I'm like, look, let's create a CFO, a digital CFO in a box. Every one of these players are going to need it. I need it. What I don't need is, I don't need my own auditors, my own accountants, and my own lawyers doing what Deloitte did to you. And I'm not saying Deloitte's a bad company. This is what companies like this do. But I can't afford to pay somebody $1,400 an hour, and they're thinking a transfer from Coinbase to Coinbase Pro is a liquidation event.
Yeah.
And this shit happens all the time. Like, the lawyers and the accountants, if people don't have Bitcoin, see, I do business with Bob tomorrow morning because I know he holds Bitcoin. There's no question in my mind. He is holding Bitcoin, and he understands it at a level that even a lawyer that doesn't hold it, I don't care how much academia he has or how many times he's read the white paper. It's very different than having it in, like, moving money on a Saturday afternoon or a bank holiday is amazing. Phenomenal. When you move $1 million on a bank holiday, dude, you're like, whoa, I paid $10 for that.
Yeah.
And it only took me 2 minutes.
Yeah.
The bank just sent me a note. I think one of the problems with self-custody is that no human being has ever read any of these banking agreements. Not one, not an ACH fee, not a wire transfer agreement, not your deposits. You drop $500,000 in the bank. You don't even know what that agreement says. And now you come to Bitcoin and people are like, hey, you got to read this, how you do this. The point is, no one's ever read anything.
Sure.
Like, they literally just, you handle it. So us asking people to take care of their stuff is like really a big move. I think it's the last thing that happens here.
Yeah.
Right. Yeah. And maybe it's because the whole system fails, but anyway, just a little point.
Can I interject? I think
please.
One thing that we can't say, the power of Bitcoin, like you talked about moving money on a Saturday night. So I'll tell you, like, a real thing that happens to us often a couple times a month at least. So our suppliers of servers and transformers and a lot of that sort of stuff that we buy on a regular basis are often overseas. So it might be, for instance, a Tuesday evening, and we're working with a supplier over there, and we make an agreement. Hey, we're gonna buy for the equivalent of $500,000. We're gonna buy this many servers. Well, in the fiat world, what would happen is we would get up on Wednesday morning, we would make the wire arrangement. It would probably be the following Monday that the transaction would finalize or clear on their side, at which point they would release the materials to us, and we might get them 3 days after that, and maybe even the next week after that. In the Bitcoin world, what happens is we hang up the phone, we send them the money, and they see it 10 or 20 minutes later. And while it's still their Wednesday morning now, they prepare the order, and while we're sleeping, the goods are already on a plane coming to us, and we've received them as early as like Thursday. So the cost, and you would appreciate that, like that's us putting, let's say that was 1,000 or 100 mining servers. That's 100 mining servers that just got put into play a week to a week and a half faster.
Right.
And that economic benefit is massive.
Yeah. Yeah. No, I agree. And I think we can share these stories all day long, but until somebody actually does it, I have a pet peeve, and it's this theory about, hey, I'm going to buy potato chips with Bitcoin. And I'm like, my God, you guys have been doing this since 2009. Okay. Like, you should be hung and quartered for using God's money to buy potato chips unless it's at a 20% discount.
Yeah.
Like, come on, man. You can't tell me, like, y'all convince me, okay, it's better than US dollars, it's better than euros, it's better than sterling. Why would I exchange that for potato chips unless I'm getting a massive discount? Which brings me to a really interesting story. I think I'm going to be able to buy real estate and other businesses on a Saturday afternoon because they breached their covenants or whatever, or the deal didn't happen. That's what I'm waiting around for Bitcoin to do. Like, you guys want to trade? Call me on a Saturday when you need $100 million, and I'll give you 80.
Yeah.
Okay, no problem. I can actually solve your problems, Mr. Banker. And Monday morning, they do not want to wait till Monday because the banker's got 1,000 of these deals.
Sure.
This apartment thing, I think I'm working on a deal right now to put Bitcoin in a reserve fund, never liquidate the Bitcoin, and go hunt really, really cheap multi-dwelling apartment buildings. I mean, hunt 25 cents on the dollar. Mm-hmm. They're immediately cash flowing at 50% capacity. It's 6 to 8%. You then take those distributions that are, you're getting 3 to 1 money on it. You can't do that on Bitcoin, right? I mean, there's so many opportunities. Now, managing your cost base and all that stuff is going to be fairly complicated, but I think the value of people are going to wake up and understand that Bitcoin and its liquidity ability should be all the money that gets the greatest premium.
Yeah.
Right?
Absolutely.
Like, if I transfer you dollars or sterling, you should say, hey, Gary, transfer the dollars, because the sterling's going to get another 2 or 3 days, right? It's just going to get slogged up. Why would you take sterling from me? You wouldn't. You'd be like, no, I don't want to wait 4 days to clear. I got a little off track on this, on the thesis of this. I just think it's so staggeringly large. Let's flip to the business, Barefoot. So I didn't realize you've been in operation since 17.
Correct.
And you're generating revenue, right? Is it all from mining, or is there component pieces where you're still doing the computer building stuff or consulting, or is it just mining that's generating the revenue today?
It's like 90% mining. Now we have 2 components of I guess technically 3. Okay. So one, the main source of income is mining itself. Machines that we own or we own through partnerships that give us Bitcoin. We do have a small hosting business. It's almost family and friends. So somebody like you might say, hey, Bob, I want to have 10 systems. Can you run them for me? And I'll charge you $200 a month a machine or something like that, you know, and I'll manage them for you. That's a small piece of what we do. And then on occasion, somebody will want to hire us because they want to own their own mining operation, and they want to hire us to help them learn how to do it and how to buy the equipment and, you know, those sort of things. So occasionally we do a small amount of that, but the hosting and the consulting are dwindling. We focus more and more on the other things. Now, what I'm trying to do though is in my sphere. So that's Barefoot Mining, but I'm also a part owner and an advisor to a company. We are now designing an ASIC. So we're well into that venture. We can talk about it time permitting, but I believe block space is a phenomenally important commodity and part of the future. And so I have a venture on block space that might be worthy of a little more conversation. And then I have a small fund that I manage. It's separate. It's called the Barefoot Bitcoin Fund, where I do investments, usually about seed stage funding. Like we did Swan. I'm on the board of directors of Ocean, which is a pool. I've done a lot of Jolts, Orange Pill app, some of those sort of things. We've done investments in those sort of things too. So I'm trying to participate kind of at a more personal level by spreading out and having tentacles across the entire ecosystem.
So let's talk about Barefoot though a little bit. What can you talk? You're private, correct?
Yep, privately held.
Can you speak to how the mining's going and where your energy sources come from, how long the energy is acquired for, if you're acquiring energy, the typical standard energy that's being used in mining?
Okay. So we focus on what I call horse class mining. So what I focus on is, in simple terms, you could think about it as small to medium sized commercial sites. So I basically am not interested in trying to do what Riot does or Marathon does and build a 50, 100, 200 megawatt site. I build sites that are from roughly half a megawatt to several megawatts, that space. And I call them horses because I can, compared to an elephant, I can build them quickly. I can get them they can cash flow really quickly. From capital deployment to cash flow is very, very fast. If something happens, I can move them. Like I'm mobile like a horse. I'm not stationary like an elephant. We use both on-grid and off-grid operations. So we have our on-grid operations are primarily in the upper Midwest and South Dakota area, but basically the old Gateway range. Our arrangements are with primarily Mid-American Energy in that era. We also have off-grid operations, and so this is a combination of different.
You're doing nat gas with Mid-America?
No, those are on grid, meaning we're just buying electricity.
You're buying the power,
and we're buying the power.
What are you able to buy power for up there?
4-cent range.
Long-term contract or just annual?
No, it's annual.
Yeah.
However, we have very little risk in that. That area of the country is very sparsely populated. They have massive energy production, though, of hydro and wind, especially those two. They can't consume it all, and there's really nothing that's going to change that. In fact, their projections are that our cost of energy will be going down with time. So, which if we have an inflating dollar and our cost is still going down, that's pretty appealing to me. Okay, if I can see that. That said, I'm
Yeah, that
trying to,
by the way, that question was not a setup. Hey, is this long term? I wasn't. I appreciate the honest answer and also the color on. Hey, look, I don't think I'm exposed to increasing prices.
yeah,
My view is, uh, energy in the United States isn't going up. It's going to go down. In fact, it will go down across the entire planet. We have a lot of it. It only helps the greenies if the price goes up.
yeah.
Right. This is a huge mistake the greenies made. They should have been encouraging extremely high prices in crude oil and natural gas. And they were stupid. Instead, they went for subsidies from the government, and the government's broke. You can't ask for subsidies from somebody that's broke. I won't invest in them. If it has a subsidy, I will. I refuse to invest in it,
Yeah.
because it can be taken away unless the subsidy has no value whatsoever, which would make no sense.
Right.
But the concept of so I agree with you. I think 4 cents for a short term contract, and you can move.
Yeah, that's the key is I only have one fixed, what I would call, so I have fixed facilities. I only have one, which was the first one I went into, which is the old Gateway Data Center. After that, everything is container based, and I doubt I will ever go into a fixed facility again. So I can pick up and move in a week. I'm gone. I'm at, so if there's a better opportunity or a threat to my existing infrastructure, it's not a big deal for me. And again, that's partly staying in this size that I I maintain that ability to be free. And I do think too, there's a more than we can probably get into today, but I think the big guys in the public miners, I don't think they understand all the risks that they take in doing what they do. And what I say is too, there's whenever I call anytime you are on grid, I call it captive mining. And the reason I call it captive is that you are in a permission situation. So even if you have a contract, you asked me if I had contracts in these, I typically don't. But even if I did, it doesn't matter that the regulators, the tax authorities, all those sort of things can change on a dime and change the economic profile, and those contracts don't mean jack shit if that happens. Now, so all that said, my passion and desire is to move more and more of our infrastructure to what I call wild mining, which means we produce the energy ourselves. The most notable thing we've done that we're public about, we're pretty private about our stuff too. Like I don't ever disclose how many megawatts we have or how many exahashes or all that, because I think that's equivalent to me telling somebody how much Bitcoin I have. Like, because if I tell you how much I have, especially in a public forum, then I'm essentially telling you exactly how much Bitcoin I make every day. Um, it's simple math to extract that. But anyway, so like what we did in South Carolina, this goes back about 3.5 years ago. I found a old textile mill in South Carolina that hadn't run since 2000, defunct, and it sat on the banks of the Enoree River in South Carolina. The textile mill had been built in 1888. It was originally powered by the water, a water wheel that drove the looms in a mechanical way and converted to electricity in about 1920. So then it mothballed, and it was in pretty rough shape. But I went in, bought the rights to the site, the water rights, and the rights to the facility. And then we put a project in. It was a multi-million-dollar project. I raised some money, and we went in and we rehabbed the whole hydroelectric infrastructure. And then we also cut the cord. Interestingly, we said we had the right to sell energy back to the grid, and we cut it because I wanted to be wild. I did not want there to be any threat of somebody telling me what I had to do with my energy. So I made it as difficult as possible because I want to mine Bitcoin. So, and when the water flows, if you take out the repair costs and maintenance costs of the hydroelectric infrastructure, we have free energy. So, No, it's really not free because those
Well,
maintenance.
it's not free because you could sell it, right? You could sell
Well,
it to
there's
the grid.
opportunity cost of it. Yeah.
If you sell it to the grid for 3 cents, I mean, you do have to. I think opportunity costs are. Every great business guy looks at opportunity costs, right?
Yeah.
And the bad business guy's like, yeah, I'm not going to look at that opportunity. Like, yeah, you had the opportunity to make $1 billion and you didn't. You should be fired. And sadly, nobody gets fired over the deal they didn't do. You mentioned something. Is that true or what? Have you ever known anyone that got fired over the deal they should have done but didn't do?
No, absolutely. You're right.
Never. And how many deals have you seen like, wow, if that guy would have done that deal, he'd have been he'd have been gold. And they pass because politics and they're scared to lose their career. And like what you're doing, hey, I'm clipping the card. Okay. I'm going to mine Bitcoin. You made a comment earlier, which you said something like, hey, I don't think these miners, these really big miners, understand the complexity. I got to tell you, I'm getting really nervous around some of these people when they start talking about, and they're all doing the same thing because they're public and they're having to answer questions from 22 and 23-year-old Wall Street kids, all sitting in a room, in a Zoom room, and waiting for every quarterly report. I'm now hearing guys with computer backgrounds like you talk about, hey, we now have a electricity trading department. And I'm like, really? Well, I know 50 people that liquidated their entire companies, dude, over trading electricity and natural gas. And they were professionals.
Yeah.
That's all they did all day. They had billions of units of energy to play with. They're in the market every day, all over the world. And you're telling me you have a position in Haynesville, Texas, and you're going to arb the power market? Dude, you might do it for a little while, but one day you're going to wake up and you're going to be blown to pieces, right? Yeah. The other side of it is they're like, yeah, we have a trading department. I said, I don't think you have a trading department. I think you sold a call option to Duke. You didn't. You don't have a trading department, dude. You sold a call option to Duke. You don't have any control here. It's just bizarre to me, right? I think you got to really stick to your knitting, or you could I agree with you. I think there's some risk here that people don't really fully understand.
Yeah.
Well beyond, hey, does this shit make money? Can we actually make cash? Now, I'm not convinced. I think you can make cash the way you're doing it, but I'm pretty sure that me buying Bitcoin at 63 grand is probably the best use of capital right now. Not having to mine it, right?
I am not a fan. I had a decision to make. There was a heyday in mining right after the China mining ban, right? So at the China mining ban, the U.S. mining industry landscape got massively profitable. And a lot of the companies in the market took that opportunity to raise capital and go public. And I had some people approach me and said, Bob, you should do the same thing. And I said, no. And part of the reason is I've been in the C-suite of a public company. I've been part of doing it before. It changes your company. It changes the culture of your company. It changes your processes. And yes, you get a bunch of capital. You better deploy it wisely and you better use it right. But yes, now you are a slave. I used the word captive before. Remember when I used the word captive? That's also what I was referring. It's why I don't say on-grid and off-grid. I say captive, because all those companies are captive. They are captive in permissioned energy, and they're captive to the SEC and all the regulation. And, it's a massive headache. I'll also say we talked about all these companies that flamed out in the technology industry. Well, it turns out it's pretty freaking hard. There's one other factor we didn't talk about, which is if you have a company, and let's say you find some success, like you said something, I think relatively, you said something wise. You said, I rarely invest in the first guy, or I don't like investing in the first guy. Well, it's not that the first guy didn't have a great idea, but usually what happens is if I'm a bright person X, and I have a great idea and I bring that product to market, well, now I have to build a company around this product. I have to have a finance department. I have to have a customer service department. I have logistics. I no longer am the entrepreneur who created the product. I'm now having to learn how to run an organization. And you'd understand this, Gary. And I had 5,000 people that worked for me at one time. Well, I didn't learn how to run a 5,000 person organization and a $10 billion P&L overnight. It took me a long time. And it's very rare that a company can go from a startup on an aggressive growth path and have a management team who also grows at the same level. It's very hard.
And growing means maturing, right? Because you can't deal with 300 staff the same way you do it with 30 or 3. And the 30 that you put together, they're usually, they may not even be ready for the journey. Right. So you have all these. This is the piece that entrepreneurs outside of mining, I mean, there's just a lot of risk building a company, right? People don't understand. You have to have the right people and the right people at the right time with the right maturity. And they can't all cost you 250 grand. When you're starting up. You see, what I like about being private, I owned a business in the fraud business. And I looked at my partner and I said, hey, I'm going to go to London in 2015 and poke around and see if we should move here. I spent 6 months in London talking to all the big players, and it was clear to me that we were onto something. But in order for me to go international, I had to move. The beauty of being private was I looked at my partner and said, look, we're probably going to drop. I think we were doing 18 million at the time a year. It was pretty cool for a little fintech, man. No debt, no, I got no equity partners. It's just me and her on the business. I said, look, we're probably going to take a $2.5 million hit. We'll move to London and expand the business. She's like, no, we can't possibly take a hit on it. You can't possibly expand without taking a hit. Like to think that you can expand and the two most senior people move to London and you're not going to have a little hiccup in headquarters. Come on. See, if you're public, you can't do that. You have to go explain it to the Wall Street. Hey guys, we're moving to London. Our earnings are going to get slaughtered. And by the way, none of that shit happened, right? We actually lost $500,000 from the move. And then the next year we were at 32. We went from 18. You have to sometimes pull back, man. Absolutely. Like get rid of some of your people, get your infrastructure together. This is the problem with the IBMs of the world. They stop changing.
Right?
Well, you can't.
The deal that didn't get done, nobody got fired for. It's kind of that same mentality. Like you get executives that have they're making $550,000 a year. They have a 50% bonus. They have a bazillion stock options, and unless they're the right personality type, they just lock up.
That's right.
They're going to ride that. Yeah. And I'll give you, I love the example you gave about the decision process that you were going through. Because let me give you this is real, by the way. Okay. Gateway went public in 1993. We were the last of the major personal computer companies to go public. What would happen is, say the end of 1992, before we go public, we were very profitable. We're sitting on several $100 million in cash. We get to the end of quarters or end of the year, and what would happen is our suppliers would call us up and they would say, hey, we're missing our numbers. This could be Intel, it could be Seagate, it could be something like that, hard drive maker. They say, hey, will you pre-buy the next 60 days of inventory for 20% discount? Absolutely. We're sitting on the cash. Boom. We do.
I love these end of the year deals.
Yeah. Right. I mean, you're
November. I'm calling people around in November. Hey man, you need any help?
Yep. Exactly. Right. So we could, as a private company, did we care if what our balance sheet showed was bloated inventory and low cash? No, we don't care. Right. Because we know, just like you did in your deal, next year our margins are going to go way up, or we can drop our prices and pick up market share, our choice. Soon as we went public, nope, we couldn't do that. The CFO would freak out if the balance sheet didn't look right,
because he can't explain to a 23-year-old why your earnings are lumpy.
Right.
It's ridiculous, man.
Yep.
Right.
Yep.
It's absolutely outrageous.
Yep.
But I think these big companies don't like guys like you and I, because we're constantly pushing. I mean, we just really mess up the old the stability factor, right? Coming up with all these bizarre ideas. I'm assuming you got a small discount, right? You got a discount to help your buddies out. So you actually added money to the treasury.
Oh, absolutely. Yeah. Well, like if we were buying in that market, it was highly competitive, right? Even a 5 or 7% discount on the cost of goods was massive. Because we were running on 20% gross margins, right? Something like that. So it would, lift the point to the bottom line net on a big number, and that was very, very meaningful. And by the way, look at the public mining companies, which we started this thing by saying, like, all these companies that went bankrupt. Like I said, I don't want to come off as wishing ill on anybody. They're not really my competitors. That's not how mining works. But they're going to be big flameouts. Like and we've already seen, like, Core Scientific went bankrupt, and there's a story of how they went bankrupt. It's probably more than we can get into, but the short version is they went public in January of 2022, raised $200 million. They were bankrupt 11 months later with $1.5 billion in debt. Like, and so if you go back and you read, for instance, their S1, which is their filing document, right? If you actually read it, you talked about people reading, like, the ACH. I actually have read their S1, and if you read their S1, what you'll see is they stay in there things like, we do not have financial reporting systems on par with a public company, and so we cannot guarantee we will consistently provide accurate results. Like, it's a company going public at the same time they're saying that. They also said, our management team has no experience running a public company.
Wow.
Like this is in their actual disclaimers. But people buy stock and they make these investments without reading these materials, and that's what you get. And by the way, the damage they did, what did they do with the $1.5 billion of debt? They had spent that money buying up every machine in the market, and they didn't even have a place to plug them in.
So they ruined the market for other people.
They ruined the market, and so that's why you might detect some angst in me about this. They ruined mining for the next 18 months, and they should be vilified at the same level as FTX, because not only did they do that, but then they took all the Bitcoin that they were hodling and all of the Bitcoin that they were generating, which was a lot, and they were instantly pouring it into the market. So you can blame, to a great degree, Core Scientific for the bear market, especially that occurred from like mid 22 to early 2023, like that time period, like, which was like FTX was taking the brunt of that. Go look at who was actually selling all the Bitcoin, and the more Bitcoin they sold, the cheaper the price got, and then they had to sell more. Like, they had created this negative feedback loop that just drove them into the ground. And so I'm shocked they've come out of bankruptcy. Again, I guess I don't wish ill on anybody, but for the life of me, I don't know why people would want to invest in a stock with, companies that have that sort of behavior.
Do it all the time. They do it all the time, my friend. But I think the industry is it's gonna evolve pretty aggressively. I wouldn't suggest that any of the miners in America are going to be successful over the next 8 years. unless you're just hunting very, very cheap energy. Like you should, like, to me, you're bringing real value to the stranded energy, and that's really the energy that should be utilized for Bitcoin. I think in 8 years, it's all going to be waste energy or trapped behind the pipe energy, probably held by sovereigns. And sadly, I don't think the U.S. fossil fuel companies are going to get their head wrapped around this. And quite frankly, they may not be the most competitive, but the nukes will be. And the nukes will understand this because they'll change they'll change the slope of their sales into the grid. Instead of being base load at 3 cents, they'll be able to offer 80% load factor and get a premium and mine Bitcoin. Yeah. And their cost is, like, to me, that could be very competitive, right?
Yeah.
Because that's effectively zero. They could stick it on their balance sheet and claim that they're selling 80% of their production at 5.5 cents, 4.5, 5 cents for base load. And they really stress the grid, right? It's a very, I mean, nuclear really stresses the grid. Mm-hmm. So there's a lot of upside, I think, to having flexibility in a nuclear output. But I think it's very difficult. To me, it's very difficult to understand the shape of the whole fossil fuel market over the next 10 years, because I think you're going to see a lot of nuclear deployment.
I hope so. Well, I was just in Europe. I got back 2 weeks ago, and
that's where I think that's it. All Europe's going to go total nuclear.
Well, yeah. Well, you've foreshadowed my story well. So when I was over there, part of my mission was to try to change the mentality of mining within the European community. And so I was in Prague, and I went to the Czech Parliament. I met with a senator there who was the head of whatever they call their energy committee. I don't know what it's called specifically. And he also sits and represents Czech in the EU Parliament. Okay, so as we were talking, he didn't understand Bitcoin really well, but very open, very receptive. And the more I talked about it, the more excited he got. And he said, "Well, this is wonderful," because he said, "We are in the process of funding the development of 4 1-gigawatt nuclear facilities in the Czech Republic." And he I don't want to violate his confidence, but basically he just said, well, in the rest of Europe, pretty much implying like Germany, especially, which is pretty close by, that they don't have their stuff together. And so, we are going to be the ones to bring the nuclear up. And we will supply at least these sections of Europe with a lot of the power they need while they're off playing with solar and things like that. And just yesterday, by the way, they announced the first 2. So that they did a deal with a company out of Seoul, a Korean company, to come in and build the first 2 of those. So the first 2 gigawatts.
Just for the audience, okay, these are monster facilities. It's a 1,000 megawatt power station that will produce energy for 11 months of the year on schedule, dude. They know exactly what day they turn it down, but it's 1,000 megawatts. It's a monster plant. Yeah. And they're scheduling 4 of them. Look, I think France does it. I think Germany does it. They're going to launch a bond. If I was the EU, I'd launch a 100-year bond, $30 or $40 trillion. The message is we're going totally green. Mm-hmm. Wind and solar don't get us there. Water doesn't get us there, but nukes get us there. And we just had 2 pipelines destroyed coming into Europe. So we can no longer, most people don't know this, but the French have missile silos at every one of their nuclear power stations.
I didn't know.
They're way air to surface to air missiles. But I like the European landscape is devoid of any energy or food. They are not producers. They are consumers now. And you added 20 million people from Ukraine flooding into Europe. That's before the whole ISIS thing.
Mhm.
So we have 24 million people, like, added to the European system. Someone has to feed them. They have to go to the hospitals. They need energy. And to me, if I'm a miner, the story I tell is continents like Europe go nuclear. And then what does that do to fossil fuel, man? We will be in a $30 crude oil market for decades. I
Yep.
know everybody's saying, hey, energy is going to go off the grid. It's going to explode. But I'm like, I think there's a lot of energy sitting around that's never had a market.
Yep.
Never,
I agree.
never had a market. And that's why it doesn't make sense to me to go take it from the middle of Texas and pay all those transport. You don't have any transport cost the way you're doing it.
Yeah.
Why would you pay a $2.86 at the Henry Hub when you can produce for $1.40 right there at the gathering system?
Yeah. That's exactly what we're doing. My long-term plan is both for me, and I think it's the right thing for the Bitcoin infrastructure, is that this, what I call the wild landscape, it needs to be developed. And I think it'll be economically incented to develop. So whether it's, stranded gas, flared gas, although I like stranded a lot more, stranded gas, small hydro, I can sit behind on some of the wind farms and all that. I can help with them a little bit, but really natural gas and hydro are the ones I love the most. Stranded gas and hydro, and I can do it economically. So I can go into a place, let's say stranded gas. I can put up a half a megawatt. I can
half a megawatt's going to use how much nat gas a day? Just roughly.
What? 150 MCF per day.
Nothing.
Yeah. So, but I can go in there. I can buy that for, I don't know, let's just say on the high side, $1. Okay. Now there's some production cost that goes with it, right? But I can buy that, and I can, at the end of the day, my cost of electricity production all in is lower than what my Riot or Marathon or these other guys do. Because some people have said to me, Bob, how are you going to compete as a small guy? How do you get economies?
I think you can compete easier. It's easier for you to compete as a small guy, right?
Exactly.
Oh,
Exactly.
Totally. This is not a scale game. This bullshit that this is a scale game. It's only a scale game if you own the energy.
Yes, exactly.
If you own the energy, you don't even have to report
Right.
what it costs you, right? Because there's some sovereigns do not have to make money to put Bitcoin on their balance sheet. They can just put Bitcoin on the balance sheet and go, hey, I'm going to use my fiat for mining, and I'm going to stick Bitcoin in my. They do not have to make a profit like Riot does.
Right. Yeah, and there's a second side to it, and I don't want to be cognizant of your time. I'm not time bound, but by the way, but I don't want to go too long for you or whatever. But you mentioned the sovereigns, so this is something for people to ponder. Okay, the product of Bitcoin mining for the last 15 years has been Bitcoin. That sounds obvious, right?
Yep.
Okay, meaning that we have all worked for the subsidy. Okay, the subsidy is going away. Going forward, we're in a small transition. We're going forward. The product of Bitcoin mining is not Bitcoin. The product is block space. So what we produce down the road, but starting now, and we're just beginning this transition, is the base layer of Bitcoin. At the base layer of Bitcoin, there's 53,000 blocks a year. There's 4 million weight units per block, roughly 4,000 transactions per block. There's 200 million transactions at the base layer. There's almost nothing we can do to change that number. So it's an absolutely scarce resource, the same as Bitcoin is. Block space is absolutely scarce too. And nation states and big financial institutions are going to fight for access to it. And they will not measure the economics of mining by the subsidy and the fees. They will measure it by the economic power that comes from controlling the block space. And so we will get a changing landscape of who wants to mine and what their motivations are for mining.
What power does the block space give the sovereign? Walk me through.
Because okay, let's pretend, so 100, we'll use round numbers. 150 blocks get produced every day. Okay. If I own 2% of the world's hash rate, I decide what transactions go in 2% of the world's blocks. I have absolute control. And that's a very powerful position. What can I do? If I'm a sovereign, I can say only the transactions of my citizens go in, only transactions of my government go in. If I am Bank of America, I can decide that my premium clients get preferred positions in the blocks, because block space is finite. And for the last 18 months, block space has been completely full, every single block, and there's been a backlog. Well, that's occurred with global adoption of what, maybe 10 million Bitcoiners and a couple companies. There's 8 billion people and there's 330 million corporations. Well, as they adopt, the amount of block space available does not change. So you asked me part of why I'm involved in this to begin with. Well, part of the reason I'm involved with it is I'm going to control some of that block space. I believe it is one of the most powerful positions in the world. Ultimately, I think somebody will want to buy me out, but while I'm here, I'm going to build as much capability. I'm going to make money in the short term. I can make a profitable business, but I'm going to control block space, because to the degree you believe that there will be portions of the economy or all the economy that runs on Bitcoin, it only runs through the people that control the block space.
Is there a way to value the block space right now outside of the value of Bitcoin?
Well, it's valued. So right now, if I want to do a Bitcoin, if I'm going to send you a Bitcoin, Gary, I basically use the mempool tools, and I say, oh, well, it's going for 22 sats per VByte. That would give me a premium position. It doesn't guarantee me inclusion in a block, but it means I am likely to be picked, because the pools today make that decision. Okay. So I, as a miner, direct my hash rate to a pool. The pool makes the decision. That's changing. It's part of the reason I invested in Ocean. What we're doing at Ocean, and others will do it too, is we will move the block template creation back to the miner. It used to be that way 15 years ago. The miner, me, will decide with my hash power what I get. And if I have 1% of the hash rate, I get 1.5 blocks a day. If I have 2% of the hash rate, I get 3 blocks a day. It's pretty simple math. Now, I mean, one day I might get 2 and one day I might get 4,
Yeah,
but
sure,
I'm going to average
sure.
3. So I know within.
I'm just trying to figure out how you value it, because if you're saying block space has some value and you're receiving $63,000 for Bitcoin,
Yeah.
is there any imputed value in the block space?
Well, I think there is. So here's what, this is a project I'm working on, but we will have a marketplace for blocks, forwards on block space. So the idea is, I'm a miner. I'll use that example again. If I have 2% of the world's block space, what I could do is, we were talking about quarter closes before, or like the end of the year. Okay. Well, I believe in the future, what you're going to find is block space at the end of calendar years and the end of quarters is going to be more valuable than block space just, in the middle of a quarter, let's say, because people that are trying to clear transactions that need to settle within a given calendar quarter, they're going to want that space. So what I could do is I could say, hey, mathematically, I know I'm going to have 2 blocks a day. So let me go sell a forward contract, let's say for the last week of the calendar year. And I will offer to the marketplace at 50 sats per BByte a reservation in a block for that time period, right? And there's people on the other side. If you're a company that is in need of access to a block space, and Bitcoin's an important part of your internal systems, well, you can go out here in July and you can reserve that space. Um, and then there'll be a natural market. I think the way to think about block space is the way you think about wheat or corn or any other commodity, that there are producers of the block space and consumers of the block space, and there will be speculators on the block space. And so it's a natural derivatives market, and it's a natural course of our market maturing. But it will change the mentality of the miners tremendously. And I think the participants, because we'll take a dramatic example. If I'm Apple, I probably actually want to either have a relationship with a miner, or I pre-buy block space, or I become a miner myself, so that I know with certainty that the transactions that are important to me will process. And it's not about fees and subsidy. It's about the economic value of the transaction, and knowing that it will occur.
Yeah, we may have to have another session on this. I can see how it could be a capacity or like the pipes that you have. There's value of that if you could lock up 10-year capacity on a pipeline or a grid. Maybe that's a similar, but we might need another hour on this conversation.
I know.
I believe it theoretically, but like if you don't have a market that's even placing any value on this right now, if the only value is Bitcoin, then that says that right now the block space is worth zero. That doesn't mean it's going to stay like that. I do agree with you.
I am talking about a future. Yeah, you're correct. I am talking about a future state.
Yeah, but no, I think that makes sense actually.
Yeah, but because the world is still stuck. So today, miners aren't thinking this way, and but I think why some of the big guys are missing the boat. Miners today generate about 94% of their revenue from the subsidy. Okay, so
wow.
Okay, my belief would be 5 years from now, it's under half, and then 5 years after that, it's almost zero from the subsidy. Okay, so we're in this decade where this transition will occur, and it radically changes the landscape. On the other side, the consumers of block space, people take it as a given that they can get access to it. But that's not true. There's only 200 million a year. Like, that's it, to service 8 billion people and 330 million companies. So if, and there's all kinds of things that we can go deeper. I don't want to, but not your keys, not your coin is a privilege. It's not something that everybody can have because of that mathematics. Like it just, there's not enough base layer. Like if Gary, you said, hey, Bob, I want to send 100,000 sats base layer to everybody in the world, it would take 40 years. Completely consume the network for the next 40 years.
Right. Well, that assumes that there's not other options, right? I mean, I think Bitcoin is a beast, but I also think there will be some other solutions that solve other problems that Bitcoin just can't get to right now. I think Bitcoin's a bit like a very large company without any management. It can only do so many things. It's going to do the most important things for Bitcoin. I could see dozens of entities farming. Whether they're going to be successful after 4 or 5 years, that's a whole different story, because I personally think Bitcoin probably eats it all. Right? I think
I'm not in disagreement. I'm just, and I think these solutions will occur.
Yeah,
but they're going to be not at the base layer. So you can send 100,000 sats to 8 billion people, through Lightning and other layer 2s, but they can't hold them with private keys at the base layer unless that's what I'm getting at.
Yeah.
So,
Listen, I think adoption takes a long time.
Yeah.
Global adoption, I don't care how good Bitcoin is. It takes a long time. Global adoption, come on. It's a lot, man. I mean, to think you're going to take over the base layer for all money. I mean, we might do it tomorrow morning. I mean, you have a president shot and Biden dies and everybody goes crazy. You have a nuclear weapon. Maybe we go Mad Max and Bitcoin. But I don't want to live.
We're not ready. We're not ready for it.
We're not ready. Bitcoin's not ready.
So it won't. Yeah.
And it's not an insult to Bitcoin that it's not ready.
No.
Like, that's not an insult. That's like saying, well, SpaceX isn't ready to go to Mars. Dude, they're doing everything they can to get there. I mean, you can't, right? Yeah. So we're making a tremendous amount of progress with, quite frankly, the worst marketing and PR program designed to be a problem. Okay. I mean, none of these founders ever read the story of the Trojan horse. It was more like, hey, let's poke everybody in the eyeballs that we can. This is our marketing. Fucking irritate everybody, scare the shit out of them.
Yeah.
Instead of just kind of minding our own business. And anyway, we're here now. I think this is, do you agree with me? I think we're into now phase 2 of Bitcoin. This is a big step change now that we're going, like, to me, 2023 was Bitcoin moving into puberty or maturity, being invited to every country club on the planet. And we are now seeing invitations to these country clubs. I mean, people are now deploying real money and they're real companies. They're real players.
Yep. I 100% concur. And using your country club analogy, I actually live in a country club here in Naples. And 5 years ago, when I started talking to people here about it, I was essentially ostracized. I was known as Bitcoin Bob because I would preach it to people that nobody wanted to hear. And I thought it was kind of a backhanded insult, right? By that, I embraced it, but there was an insult implied in that by a lot of the people. The mood of that has changed. There were a few people that listened, a few people that bought and did extremely well as a result of it. And I think they were all banking on, Larry Fink and these other folks. Like they really never researched it, just like I hadn't, but they were so dismissive of it. And now a lot of those same people have come back and they say, hey, can we have coffee? Can you explain this to me again? Can we go play 9 holes and maybe you'll explain this to me? Like that happens all the time now. And I'm not, nobody's called me Bitcoin Bob actually for a while.
Very interesting, huh?
Yeah.
Yeah. I've been doing this my whole life. I have been treated like a plague, dude. I'm buying, I think, 300 to 500 million cubic feet a day from ExxonMobil, who are literally 12 minutes from my office in Houston.
Yeah. 3
years of invitations to take them to lunch. No, thank you. No, thank you. No, thank you. Dude, I'm buying 500 million cubic feet a day from you. Can I please buy you lunch? Nah. You know what they really say? We do not want to be seen with you. Okay, we are ExxonMobil. Oh, totally. We have no interest. We'll take your money, but we don't want to advertise that we're selling you 0.5 BCF a day, dude. And then next year it would be a BCF. And then 2 years later it'd be 3 BCF. They don't understand change. And I'm like, I'm not defaming any. These are big, great companies, but their ability to move agilely, their culture does not afford them the luxury to pivot well or fast. And they have too many people to ask. No one wants to cannibalize their own business. And it's extremely difficult to say, oh, I'm going to cannibalize my own business because somebody else is going to slaughter me if I don't do it. Yeah. And this is the piece very, and they're quarterly. So they're quarterly earnings. So I say, hey, there's no way. It's actually easier for you and I. People give me a discount on all my businesses that I start. I'm like, you understand that I have a greater likelihood of making this work than, like on the Node 40, than any of the top 4 accounting firms. And people look at me like, that's ridiculous. No, they have 800,000 people, man.
Mm-hmm.
Like one accounting firm has 800,000 global employees and agents.
Yeah.
There is no culture.
Right.
You only end up woke there, right? You only end up just middle. By woke, I just mean there isn't really a decision anywhere. There's no like rights and wrongs. It's just all muddled up because it's just too much.
Yeah, I think what you're identifying, yet again, is the risk adversity that comes when people get into these positions. The deal that didn't get done, right? And in this case, it's the simple case of having lunch with you, is easier for them that they're not going to get fired because they didn't have lunch with you. And if they miss the whole Bitcoin thing, they're not the one that's going to get blamed for it. But ultimately, like I mentioned Kodak before, I mean, Kodak invented the concept of the digital camera, yet they're bankrupt. They could have owned that market for 2 decades. And it ended up putting them out of business anyway.
That's right.
When I left Zenith, I told my story at the beginning. When I left Zenith, the reason I left Zenith was, so I had spent 4 or 5 years there. I was in the design teams. I was now like project manager. I'm leading some of these designs. And so we would go present to the executive team and sales and marketing group and say, hey, here's what we can do for the next generation of notebook. And it might be, hey, we can make it thinner, we can make it lighter, we can, add this functionality. Well, what would happen every frickin' time was they would come back and say, well, people liked the last one. Can't you just make it cheaper? And this is like a jobs thing, and I learned it myself real time. Is like, no, these focus groups and customers, they have no ability to project the future. They won't know they need it until I show it to them.
That's right. Right.
And so I quit and did the startup with a couple other guys to push mobile computing to a new level, and we were successful. But it's why Jobs was successful. It's why a lot of these companies are successful, because you have to stay away from those people that are in that mindset. Right?
Yeah, I've always been surprised. Some of these larger companies, when they see this type of a change occurring, they don't go grab a guy like you or I and go, hey, look, I want you to run a special division here for new opportunities. And if I'm the CEO, I take a couple of guys, I give them a budget. I don't let them blow the bloody company up, but they're constantly looking for, you give a guy like me $5 or $10 million, dude, I can like really supercharge it, especially if you have a logo. Hey, I'm with Gateway, dude. I'm with Dell Computer. You get a meeting. I mean, most entrepreneurs, their biggest challenge is finding the right guy to talk to.
Sure.
So when you have a logo like Visa, it's like, oh yeah, I know who to call, man. I'm Visa. They'll take my phone call.
Yep.
But I've been surprised that more firms don't do this. Look, I think I'm with you. I think a lot of the American miners are going to make mistakes. Having said that, I own some of the miners. For me, it's simply a play of this is going to be a run, and people are going to invest in the miners to try to get a better ARB on Bitcoin. But long term, I think a lot of these businesses are going to go under reconstruction, or kind of maybe look at the way they're doing it, or maybe get bought by the oil company, some energy companies. That might be the way.
Well, I would say very possible, but don't be surprised if it's Bank of America or JP Morgan that buys them too.
Yeah. Well, I mean,
for block space access, we'll go back to that.
Yeah. No, listen, I would like to do another one. I've got a meeting at 2:00. I've got to be in Tampa with some venture guys. But this has been really fascinating for me. I forgot that you lived in Naples, so we should try to get together because we're like 2 hours away from each other.
Yeah.
Are you going to Nashville, by the way?
Yeah, I'll be in Nashville. Yeah.
Awesome. I'll be there. Hope to see you. I'm sure I'll see you. You guys follow this cat, okay? He's got a lot of very interesting information. And if any of you know anything about block spaces, what he's talking about, arbitraging, trading the future of block spaces. I think what Bob's saying is that space that is used to make Bitcoin should become valuable one day. For storing data, I think what you're saying, right? For grabbing a
just the fact that if you send me a purchase order, you're trying to pay for that purchase order, that transaction, and it's a Bitcoin transaction, that doesn't finalize until it hits the base layer.
Right.
If it's especially and will be big ones, right? Your company is buying $3 million worth of something from me. We're going to use the base layer. Well, you got to have you can't assume in the future that you will have access to the base layer.
Right.
When you want it. When you want it.
Yeah. This has been, we need to have another call, another discussion, because this has been my issue with wallets. Tell me what the cost of me getting my Bitcoin off a wallet's going to be in 2050.
Yes, exactly.
What do I have a guarantee I can get it off for $1? Because they could call me up if I want to transfer 2040. Hey, what if they tell me, hey, it's 5 Bitcoin to move 1?
Yeah,
I mean, that's a problem.
Here's what I can tell you, Gary, is if you own some mining or you own rights to block space, you'll get it for free. If you don't, you may not get it.
That's my point, that I haven't really understood through the whole process. But when I do the wallet, I'm like, can you guarantee what the rate is? And now you're telling me, hey, if you own block space, it won't cost you anything.
Correct.
But if I don't own it, that must mean it's going to be valuable to somebody. It's going to be valuable to me at that point, at least for somewhere between 3 and 4 BTC, right? If I'm being charged 3 or 4 BTC to get one off.
Yeah, right. In that case, to access, if it's an actual economic activity, like I said, if you're gonna pay me, or I'm gonna pay you, let's say I'm gonna buy something for 100 Bitcoin from you, and there's 20 Bitcoin of profit for you in that transaction. If you own block space, the value of that transaction to you has a lot more to do with the 20 Bitcoin that you're going to own and the certainty of getting it done on a known time than it does with whatever the fees and the subsidy are in the block. Like that's what's important to you, I think. I mean, you tell me.
Yeah. No, I think anybody that's wanting to trade, they want to get settled, right? To me, it's settlement. You don't compare this against Visa. Visa is not a settlement system. It's a transaction system. So they can brag all they want about how many transactions they do. They never get anything pregnant. So that's like saying you're just banging away all day long and you never make any babies. I mean, big deal. But nothing settles on Visa for 180 days. And this is one of the problems with the way we pitch Bitcoin. It's like we're comparing transactions to settlement. It's not even close. I mean, this is the gold liquid system here. This is perfect.
Yep.
Listen, Bob, thank you very much. I would love to do another 20 minutes with you because you've got so much information. You guys follow Bob. He's doing some really cool things. You're not raising money or doing anything that you need to share, or are you raising money and you want to share?
We frequently do, if that's of interest. If investing in individual mining, what I usually do is every site I bring up, I create a unique LLC, and I often bring in outside investors. If that's, I don't have one at the moment, but I'll probably have several between now and the end of the year. You can reach out to me through Twitter or the barefootmining.com website. And send us a note, and if that's of interest to you. Yeah,
Bob, that's awesome. Thank you so much. Really look forward to seeing you in Nashville, and thank you for your time today. Really
thank you, my man. You have a great day. Bye-bye.